All right. Somebody let me know in the chat if you can hear me, by the way, please. All right, cool. I got somebody that can hear me. Awesome, awesome. Let me go ahead and just get my lights on here. We're going to do a quick live stream real quick. I want to just go over basically just the overall macro view of, mostly just Bitcoin and stuff, and then go over the price action for the week. And then that's pretty much it. I want to make it a short stream. I do have plans tonight, so I'm going to be in and out of here probably within about 20-30 minutes. And the replay for those of you, as I mentioned in the chat, will be available after the live stream so that all of you guys can catch that, whether you missed the beginning or whether you had, needed to leave early or what have you. The replay, YouTube does all that magical stuff automatically, so it should pop up there pretty shortly after I'm done streaming. So let me go ahead. I'm going to get some water real quick. Go ahead, get my lights flipped on, and then we'll go ahead and begin. Just give me about a minute or two. Okay. Thank you. All right, let's go ahead and do this. Let's get the thingy off my screen. Boom, there we go. How are we doing today? I hope everybody's doing well. Happy Friday, everybody. Appreciate you guys joining me on this awesome Friday evening. It's been kind of a wild week for Bitcoin, so we're going to do like I normally do. We're going to start at the higher time frames, kind of start working our way down. Take a look at some of the indicators. Most of you that follow me know that I am partial to support and resistance, Ichimoku Cloud, and most importantly, volume. You guys know I am a massive volume trader. I've been way more successful trading markets ever since I started switching over to that. And it has been a lot easier for me to be able to trade looking at volume. So if you guys have questions about that, make sure that you tag. I will be monitoring, not necessarily all the different discords that I posted the link for this stream into, but I will be monitoring the YouTube chat. So if you can, please try to put your questions there or whatever. I'm not going to be taking chart requests, by the way. I'm not doing that in this stream. I'm going to keep it to 15 minutes. So let's switch over to the chart. And we'll go ahead and get started. So this is pretty much how I have my existing layout for Bitcoin. All of these support and resistance levels line up. I just break them up so that I don't have like massive bars cluttering up my screen. Most of you guys that follow me know this by now. So with this general structure over here, basically what's happening is we have a couple things going on. There's a couple different ways that we can look at this, okay? The first way is looking at this entire macro structure and basically analyzing this and saying, oh, well, this could be a head and shoulders here. That's a hard one to call. This back here was clearly not a head and shoulders. This was more like, Bart Simpson in here, okay? Or whatever. This was not a head and shoulders. Head and shoulders is supposed to be like this on the top, very defined peaks. This was not, okay? This was like 1, 2, 3, 4 peaks. To me, this was never a head and shoulders. Now, this over here is a lot closer. And that worries me just a little bit because the structure is a lot more clear on this macro time frame. However, you guys aren't here for the meme charts, right? I mean, head and shoulders, it's a meme. At most, this is a double top if we're going to be like macro bearish for a while. But in general, this, if it is going to be a head and shoulders, is a lot more valid to me than whatever this clusterfuck was over here. So moving on from that, in our most recent price action, what we've seen here on this way down is a potential channel. So I drew a couple trend lines, a couple diagonals here. I know these actually line up a lot better on the 4-hour chart. We'll get there in a second. Anyhow, so I have these channel lines here. And then I have a lower range. Excuse me. Sorry about that. Anyway, channel lines here, and then I have a separate channel line for an extreme bottom range or whatever, if you want to call it that. But anyway, the way that I have this set up is I basically accommodated for a throw over. Top of the channel, the retest didn't hold. We came back into it, tried to break out again, rejected, and then had another leg down. So this is obviously the daily chart. Okay, so while we've got our drawings on, let's also pop up our separate indicators as well as our volume, and go ahead and take a look at this. So the first thing I want to point your attention to is we haven't really been having too many large swings down here. Even with this whole grind down, for the most part, the MACD has been staying like really flat. And that's actually a good sign, because that means that for the most part, there hasn't really been like a super crazy amount of volatility, obviously minus, this wick here, which did eventually fill. Everybody thought that we were not going to fill this wick. I knew that was nonsense. It took us a while, about a month, but we did end up filling that. So now that we've done that, and we've had, so far we're bouncing off of this major area of historical support here, which goes all the way back to like May. So very, very well-known level of support and resistance here. If we're going to bounce, we need to see a hell of a lot more volume than this next week. That's going to be a little difficult. For those of you guys that are in the United States, on Monday next week, it's Martin Luther King Day. That's a federal holiday. The markets are closed. The banks are closed. Most businesses, I mean, unless it's like fast food and normal restaurants and stuff, most of that stuff is going to be closed. So there is that, I guess, kind of downside to that. Also here up on the East Coast, near DC, we are going to be getting snow Sunday night into Monday. So there's the potential that maybe we also get a snow day with a federal holiday at the same time. I don't know. We'll have to see, guys. But weather fucks with the markets. People don't want to go out in it. Federal holidays, obviously the markets are closed. No one can trade it. So I think, this volume that's been slowly tapering off here, that's kind of a trend that I expect to hold into next week. I don't really expect too much to be happening, especially in the early part of the week. Thomas says a snow day is bullish. Yes, for crypto markets, for legacy markets, it doesn't do shit. But yeah, for traditional markets and not all legacy markets, Forex markets are still open. Those are, well, actually, are Forex markets open on Martin Luther King Day? I don't know. I don't quote me on that. They might actually be closed on that too, or closed in the United States. I don't know how that works, because Martin Luther King Day is not an international holiday. It's just a national holiday. So the US markets are closed, but like everyone else's markets are open. Ours isn't. I don't know. We'll see. If you guys know more information about that, comment down in the description below, because that's something that I don't know. I've never really paid attention. Me personally, I just don't trade on federal holidays. I normally don't trade on FOMC days unless I have a really good or really bad feeling about it and I'm biased, or I pretty much already know what's going to happen. And I also do not trade on non-farm payroll days. At the beginning or the end of the month or whatever. Those are like the top days that I do not trade. Legacy markets, it's too volatile for me. But anyway, moving on here, let's get back to just taking a look at this chart real quick. In terms of the volume, this was the beginnings of a bounce here, and I really do not want to see this on the daily chart start losing momentum. It's a little too early to be fizzling out here. Now, yesterday's candle, or 2 days ago, whatever, this was not a good candle to be seeing. However, today's candle closed relatively bullishly, which is good. We didn't close below this trend line that I have here for this proposed channel, which is good, which means that we're holding our, I guess if you want to call it the upper lower trend line, if that makes sense, because I've got two lower ones here. So, but that did hold and we bounced higher. It looks like right now we may be moving higher, but we're going to need to see some spot volume. What this market needs right now is it needs interest because there are no market makers in this market right now. That is a problem, because when you only have derivatives volume, you see bullshit like this happen with, like $3,000 wicks, because it's just sweeping liquidity because the only volume that's on the market is coming from derivatives exchanges. That's not a good thing. You can tell when the market is going to flip over because the spot volume disappears. You can tell when the market is going to start flipping trend to the top side because the volume reappears. And we haven't really been seeing that too much yet. So we'll have to see, I guess, probably later on in the month, and kind of see how this goes. But all in all, for right now, I could have sworn I just heard somebody whistle at me. Am I crazy? Did you guys hear that? Am I fucking hallucinating? Hold on one second, guys. Okay. Anyway, yeah. So for right now, the markets, they are, yeah. Okay. So someone else did hear that. Okay. So it wasn't just me. I could have sworn I heard that too. I was like, am I fucking going crazy? Anyway, so next week, this weekend, I think is probably going to be like like tonight and tomorrow-ish is probably going to be more volatile than Monday and Tuesday. Okay. Especially since Monday is a federal holiday in the United States. So with that said, let's go ahead and move over to the 4-hour chart. I already went over the MACD. There's really nothing on the daily chart. There's not really too much to be going over here. We don't have any major crazy divergences that stand out. Okay. We don't have, like for the most part, the RSI for the last like 2 months has been just sideways. Okay. It's not really trending. It's just bouncing back and forth with this clusterfuck price action. The volume has been back and forth. In general, it's been tapering off now. And my expectation would be to see something similar to like what we saw on the 1 or the 4-hour chart, where we saw this really nice curve of volume with decreasing bearish volume and then increasing bullish volume. Okay, so that's what I'm hoping for on this. That would be the ideal situation. But, in terms of like smaller price moves on the daily chart, I would be anticipating probably something like this. Okay, where we like slow grind up here, potentially get a throw over, and then continue moving, to the top side, in the beginnings of February and stuff. I'm more of a longer term trader now. That's just because I have a lot of things going on. I'm not really in the scalp game anymore. The high leverage marketing in and out, it really takes a toll on your profits with the fees and the slippage and the funding rates and all of that stuff. So I've kind of like toned that down as I've like matured as a trader. And I really like sticking to the 1-hour chart. That's like my new home now as I've evolved as a trader. It's where I feel most comfortable. It's where I chart the most. It's where it's easiest for me to find setups, whether it's with the assistance of my automated algorithm or not. Again, more information on that is on my website. Link is in the description. You guys can check all that out. There's different packages there where you can get the Discord, not get the Discord, get one bot and an algo, get 2 bots. You go look that stuff up. I'm not going to explain that here. We're looking at charts right now. No ads, right? Anyway, so we recently kind of had this midline fake out here. And this is what really gets me about trying to trade these flat horizontal ranges here, is because you see shit like this. This is why I try to stay away from midlines at all costs. Doesn't matter if it's in a flat trending market like it's crabbing like we are now. Doesn't matter if it's in a parallel channel like a bull flag or a bear flag. Doesn't matter. I always try to avoid the median lines because you will constantly see shit like this. Constantly. with the wicks and the fake outs and the, huge reject. It's just too unpredictable. And I mean, you can look at any range that we've had and go back and look at this. Okay. Like here, this was a big fake out here. Okay. This a whole bunch of wicks here and then a big rejection. We held above it and then we slow bled here. Huge rejection wick here. I mean, these examples, look at this madness. Like everybody remembers this. I think that was actually an FOMC day back in at the beginning of the month or something. But yeah, I mean, we see stuff like that all the time. I tend to stay away from those midlines. I suggest if you're a newer trader that you do as well. It's very difficult to trade those, very, very easy to lose money and get chopped up in. So try to avoid them. If you've got a solid range and you can see where the midline is and it's pretty well defined, like this one is, maybe you have a slightly better chance, but you definitely got to be using stop losses and good risk management. Don't be using high leverage when you're trading in a range like this. You got to have patience, and normally the patience will pay off. When my algo originally went long from here at about 41.3, I stayed in that long until up here when I took the profits at the midline, closed it out. I don't think it longed again until this, basically like this support retest. So I took this as well. And then I straddled the market up here. So I was basically hedging myself. Okay. So once we got up into this resistance zone today, yesterday, whatever, I took half profit of my position, moved my stop loss up below this low. Obviously that got wicked out here on that move today, which is fine because it was in profit. So my long is closed, my short, I close that out too. It's the weekend. I don't trade on weekends. I was able to close that out in profit as well. That was going against my algo, by the way. My algo is currently long. So anybody that wants like some free alpha and you're checking out the algo, it looks good. You like the results that it gets. Cool. Yeah. Well, free alpha. The algo is currently long. Yeah, there's that. Anyway, just kind of hovering around here. And again, going into a weekend, I just kind of want to sum the week up. And unfortunately, there really isn't too much to sum up on this chart. We've literally just been ranging for the entirety of this month so far. Once we broke down into this lower range here, we've just been ping-ponging back and forth between the lower extreme and the midline until finally a day or two ago, we broke above it, hit resistance, and immediately had that huge rejection here. One note on this rejection before, or what is trading stocks safer? Nothing is safer. Nothing is safer. You can pick any Forex pairing and any stock and you're still going to see the same bullshit. You're still going to see it. Everyone likes to say that crypto, they're so manipulated. It's a fucking scam. It's a scam wick. Well, if Bitcoin has lower liquidity volume than almost every other legacy market or Forex pairing, then how the hell do the legacy markets and Forex pairings produce the same kind of shit on the chart, right? You're going to tell me that hundreds of trillions of dollars worth of volume in the foreign exchange market every day is manipulated? Someone's manipulating $1 trillion market? No. Now with Bitcoin, I will say with Bitcoin that is possible because it's been around for so long that there's a lot of people with shit tons of Bitcoin that can manipulate the price. However, with a foreign exchange market, like let's say the Euro USD, you would have to have literally like tens of trillions of dollars to manipulate that market. But yet when you go look at the Euro USD and go down to a 15-minute time frame, it looks just like this with crazy fucking wicks and go mark my words. Go pick a Forex pairing blindly, come down to like a 15-minute or a 1-hour time frame, and then tell me what you see. It will trend a lot nicer when it is trending. But when the market starts flipping over in a Forex market, it gets bad. It gets bad. So not one market is safer than the other. It is what it is. I hope I answered that question completely enough for you. But you're always going to have volatility. There's always going to be volatility of markets. You're always going to have risk on scenarios or risk off scenarios. That's really the only way to classify those. And the best thing that you can do to avoid exposure to a lot of volatility like that is implement a stop loss. Make sure you're not overexposing yourself and make sure that you are forming a trade plan before you enter, following the trade plan when you do enter, and then managing the trade, which is most important when you're in the trade. Trade management, very important. Okay. Have to manage your trade. If I'm in a trade for a week, that doesn't mean I'm not looking at the trade for the entire week. Every day or every couple hours, every 4 hours, whatever, I'm going in there, I'm looking at the trade. Why? So I can move stop losses around, or I can add ladders or take ladders away, or move stops in profit, or, hey, it looks like the volume's dying. Maybe I want to close here. You have to manage the trade. If you don't, and you're just full entry, no ladders, stop loss at a set amount every single time and a take profit, you're never going to be successful doing that, because the markets change like this. So if you're not constantly or once in a while for a longer term position monitoring those plays so that you can make adjustments based on what the current price action is, you're going to end up spinning your tires in the mud. Either you're not going to make very much money, or you're going to make tons of money off a few trades and then give it all back because you never really had an adjustment for any risk managements or strategies and stuff. So just jumped in now. Apologies if you've covered this. Where do you see Bitcoin's next movements? Honestly, I did go over that a little bit. The replay for the stream will be after this, but yeah, you definitely need to be careful. This weekend's going to be a toss-up. I don't know how many of you are from the United States. I mentioned Martin Luther King Day is on Monday. That's a federal holiday. The markets here are closed. I don't know what kind of an effect that's going to have on Bitcoin, because that's a global asset. Those markets never close. So it's a little bit of a toss-up there. We're also going to get snow here on the East Coast too, which is, the East Coast is where New York is, obviously. So it's going to be a little toss-up. Honestly, on these higher timeframes, 1 hour up, this volume here, I would have liked to see that nice curve. And unfortunately, we really did not get that. Now on this 4 hour chart here, when I said I'd like to see, like on the daily chart, a real nice curve of the volume, like we saw on the daily. And this is what I'm talking about right here. We got this huge decrease we got a huge decrease of bearish volume, which means what? That means that bullish volume is going up. Okay. Then we actually start flipping over to green bars, and, we start getting increasing, for the most part, bullish volume. So overall, over the last week or, whatever, we've gotten this really nice curve of volume flipping over to the top side. That's all well and good. That actually, just drawing that on the screen made me realize something that I didn't really notice before. Let me bring up a fresh chart of just any other different pairing to illustrate this. This potentially could be a massive head and shoulders bottom. I'm only just seeing this now. This would be a massive cup and handle. Sorry, I think I said cup and handle the first time. Cup and handle if I didn't. If I said head and shoulders, I'm sorry, that's wrong. But, okay, that works out, right? So we've got this low here, pretty solid resistance level, nice swooping arc bottom, and a potential handle here. So maybe if you're a classical chartist, maybe you might want to think about playing this. But honestly, I wouldn't just go ahead and hop into a long here. Why would I not do that? Well, look at these 4 hour candles. They're shit. There was no follow through after this big green candle here. None. It just doji, gravestone doji, another doji is forming, and there's another almost 3 hours left on this candle. You're going to want to wait, or at best, maybe ladder, and you could use this wick or just below this wick as your invalidation. And, you could ladder some longs like here, and maybe up here. Okay. And wait for those to trigger. And then you'd end up having some kind of a long position. If you hit and they trigger, you'd end up having some kind of long position. Average entry would be somewhere around here. Stop would be really tight. You would want a tight stop on this move. Trading a classical pattern by itself without volume confirmation is extremely risky. So make sure, if you've been learning volume and you've been watching the videos and tutorials on my YouTube channel, make sure that you subscribe, by the way. That really helps me out with the algos. Then you will know that if you are playing this by itself, this at most is your invalidation. So maybe you could throw one other ladder in here and then put a stop below the low. You could do that. That's normally something I would do. Normally I split my ladders up and I have 3. Usually with most positions, I do 3 ladders. But this is not like, this is what worries me on this play, is because this is actually, it would actually be a pretty decent long to ladder into, because you've got a very clear invalidation, the invalidation being these wicks. So not a bad play. If you're into classical charting patterns or whatever, it's not a bad play to take. However, be mindful of this volume and keep in mind that even on the 4-hour chart here, your MACD is also in bearish territory. Okay. So it's an iffy one, but it could work out. That's a pretty decent head and shoulders pattern. Honestly, or cup and handle. Sorry, I keep calling it a head and shoulders. Another thing that's possible is we could see a swift move to the downside and a huge bounce. And that would be what's called an Adam and Eve reversal. Okay. So, that's what that is, or Eve and Adam, whatever. You either get one of these and it goes like this, or, it goes like this and you get one of these. Same kind of deal. I don't really like Adam and Eve patterns that much. They don't really normally, they're very rare, and they're very, very difficult to spot because they've normally already taken place by the time you figure out what it was. So those are a little more advanced, but in general, classical charting, potential cup and handle pattern here. So there is a potential play there. But anyway, that's what I was talking about with the volume here on this 4-hour time frame. I would really like to see this start continuing, like to the top side here, and we get, some more high bullish bars here for the candle in the coming, week or something. But if we come down to a 15-minute chart, let me actually come back to my other, here we go. Let's come back to my other chart here on the 15-minute. And we're actually going to throw on, 1 hour. We're going to throw these drawings out and we're going to take a look at some of our levels. Okay. So I use this indicator a lot. Why? Well, because I'm a huge volume trader. So deal with it. Anyway, we're in a good spot here. Okay. We had this naked point of control from, I believe this was Monday. Was the 10th Monday? Yeah, the 10th was Monday. So our Monday point of control, we swept that, which is awesome. We just swept that today, like right at the beginning of the day, very early in the morning here, happened at 5 a.m. Swept that and broke above our daily point of control, never retested it, and kept kind of grinding higher. This is kind of like coiling up, in my opinion, on this 1 hour. Okay, we're kind of seeing something like this where we're coiling up, which technically from the downside would be a bullish kind of thing. Because we see the same thing when we're coiling to the downside, right? We get some big move to the downside, a little bounce or whatever, we start grinding it, and it coils to the downside and then breaks down further. This is doing the same thing, except to the flip side, to the top, okay? So same kind of deal here. However, we're not talking about that. We're talking about the volume, right? I really want to see this point of control here, back from, I guess, Monday, Tuesday, Wednesday. So the middle of the week, hitting our midweek point of control here and sweeping that again, that would be really good. Now, outside of that, and obviously our major resistance here, which is right above it, there's not really any other points of control below us until we start talking about real deep and we bring it up a time frame to like the 4 hour. These are our only other naked points of control below us, and these go all the way back to July. If these get swept at this point and we do make another massive move to the downside, that would probably be followed by a very significant bounce, especially if we swept all 4 of these at the same time and just completely nuked to like 32.5. Now, that's like a $10,000 drop from here. I don't think that that's going to happen. I don't foresee any kind of black swan event or market capitulation occurring. Now, be mindful, though, that in the coming weeks, when Jerome Powell in the United States, the head of the Fed, is going to start increasing the rates, whenever that's going to happen, be careful. There's going to be tons of volatility. Now, I'm not saying it's going to be good. I'm not saying it's going to be bad. If you're a newer trader and you haven't factored in fundamentals into your trading yet, especially legacy fundamentals into your crypto trading, you need to learn that for yourself. I'm not going to hand you the answer or spoon feed you. You need to grow as a trader and you need to experience those things for yourself. That's your real education. If I just tell you all the answers, you're never going to really learn anything. But I will tell you that there is going to be massive volatility on days that rates get raised or on days of announcements on this is the date that the rate is raising. Normally it's going to be that date because it's announced ahead of time. Like he'll make an announcement saying, hey, on such and such day, we're going to raise the rates. That's the day that you'll get the volatility, not necessarily the day that the effects take place. Okay. It's kind of like a buy the rumor, sell the news event. Except with, this kind of thing with raising rates and stuff in the United States. And other countries around the world. We're not the only country doing this. Okay. You guys have to remember that too. All the nations, governments and money printers are going to be on this shit. So those are going to be important days to be watching for and news events to be watching for. Bitcoin is traded on legacy market brokerages now. There's futures, there's ETFs. Legacy market news will affect Bitcoin. We're not trading. It's not 2016 anymore. We're not trading back, like we used to trade Bitcoin, 3-5 years ago or whatever, where $1,000 move was a really big deal. $1,000 move for people like me that have been around for a few cycles. It's like a fucking joke now because Bitcoin's 45,000. When Bitcoin was 4,500 and it went $1,000, that was like mind blowing. A crazy rip. Now it moves $1,000 and I'm like, meh. So there is that. Up or down mainly. Yeah, basically. Not up or down though. I think in general, we're probably going to move to the top side from here. And here's another reason why I say that. Actually, no, I think it was down here on the 15-minute. Yeah, on the 15-minute chart, this is illustrated really well. So all through here until we swept our Monday point of control. Look at all where the other points of controls are. Okay, for the previous week and over the weekend. Sundays, Saturdays, Fridays, Thursdays, they're all basically right on top of each other. The majority of the volume was traded basically right at this level in between 41, call it 41.5 and 41.8. Okay, like a $300 range. That's where 90% of the volume was all through here for 1, 2, 3, 4, 5 days, right? Okay. The fact that we swept this and did not break down and bounced in general, I mean, that's a pretty significant bounce on the 15-minute time frame. Okay, that's big. That's nice. That's the kind of bounce that's not the bounce you're looking for. This was the bounce that we were looking for off of that drop. And if you trade with volume and you knew that this point of control from Monday hadn't been filled yet, you probably had a bid down there. That's just the way volume trading goes, right? It's an order block. It's Monday's order block. So trade Monday's order block if it hasn't gotten swept yet, right? Pretty basic stuff. Now we're kind of trapped in between yesterday's and the day before's, like other, order blocks from the earlier week. In general, I think that's probably going to mean that we're just going to see a whole bunch of chop here. Okay. I really don't think that we're going to be doing much, especially like over the weekend and or Monday. Now I could be wrong on this. There's other weekends that I was like, oh, it's going to be low volume. And then it just fucking takes off like $4,000. And then I check the price on Monday and I'm like, oh, fuck, I'm a dumbass. I didn't go long, or, oh shit, I closed my long on Friday and I missed it. And now I have to look for a re-entry or take a short. But there's always another trade at the end of the day. Once you get comfortable with your own skills and abilities, you'll be able to do that. For me right now, I've already taken my trades for the week. I've already closed my trades for the week. I don't really trade on Friday except for managing positions that are already like massively in the profit or closing those out because I don't want to experience drawdown on low volume, high volatile weekends, which is potentially what we're going to be moving towards this weekend. So, I kind of hope that all that helps you out, guys. I'll take a couple questions or whatever real quickly, and then I'm probably going to go ahead and get off here. Me and my wife are going to go out and do some stuff tonight. So, i.e., I need to get out of the house and have a beer because I'm busy and tired and exhausted and need to get out of the house. Let me open up a separate window real quick. I think I've got, let me bring up my Discord. Let me make that window smaller. I've got a couple people messaging me on Discord here. Let me get their questions real quick. Let's see. All right. Well, not too much there. That was actually a DM. That wasn't actually in the Discord. So it is what it is. Anyway, Augustus says, isn't a cup and handle a continuation pattern, not a reversal one? Yes, that's actually true. That's technically correct. In terms of like how it's supposed to be used. Now, there is a little bit of confusion around that, obviously, but I wouldn't really call it confusion. Technically, it is dubbed as a continuation pattern. However, that's normally the kind of pattern that you would see in an uptrend, not a downtrend. So, I mean, at the end of the day, would this really be a technically correct cup and handle? No, not really. But at the end of the day, it looks pretty fucking similar to me. If this low doesn't get broken, I mean, yeah, obviously we're going to see a reversal here. If it does continue to the downside, then obviously, yeah, that's going to be the short up there. To be honest, if you were planning longs, I would have a very close invalidation below these candles if you wanted to play the upside in this. However, if you were looking at higher time frames like the 1 hour or the 4 right now, and again, you're like volume oriented like I am, and you're watching this volume on Friday evening start, just dying off here. Yeah, you might want to short this lower high here if you think that we're going to flip over. There's nothing wrong with doing that. You could even set your bids up higher if you wanted to play the short side of this. I mean, you're going to be technically correct by doing that. And the reason why is because, like, who the hell isn't going to short at the resistance, right? If you've got your range here and this has been playing very nicely, abiding by those range lines that you've had for fucking a week or two, then play your range, play it. Don't get scared, but I will tell you, don't be scared to play a range. But there's two very important things that you have to remember is it's not even so much your position sizing. Well, it is, but the most important thing with trading in a range is you cannot be using high leverage. You have to be laddering your orders to be compensating for like scam wicks or fucking crazy shit, right? The crazy volatile, like $2,000 candles. You have to be able to accommodate and give it room to wiggle. You can't jack up your leverage. You have to have a solid risk management plan. And above all, you have to be patient with trading in a range. Like when I took my first long in this range here, let's see, I think I took it here originally on the 5th, and I had a ladder here and I had a ladder here or whatever. My average entry was somewhere around here. I waited 4 days or 5 days to take profits at this top. Just waited, holding through the drawdown, low leverage, smaller position size, so I'm not getting raped in the funding rates and the fees and all that shit. And I let that shit ride almost the entire week until I took profits up here, moved my stop below here into profit, and then took a short. Done. And those were my two trades. I want to say two trades for the week, but I mean that one long I had it open for the screenshots I posted on Twitter. I opened it on like the 4th or the 5th. And when I took half profit up here, it moved my break even like way under 40K. It was like 39.9 or 8 or something. It was really low. I really wish that I would have kept that open and not had my stop so close here, because this would have been the ad after I took profits. This would have been where I should have been adding back. I wasn't patient enough. And also I didn't really want to be stuck holding, more than 1 or 2 positions or whatever over the weekend. So whatever, took my profit, closed them. So I think that's pretty much going to be it for the live stream. Let me come back to the camera real quick, just kind of sum up for you guys. Just kind of give you guys some news about what's going on with me, what's going on with the Discord, what's going on with the Twitter and the algo and the blah, blah, and all the cool shit, right? There's a lot of cool shit going on. Make sure you check out kobra.astrobit.io. I think I have to add that link into the description below, but I'll type it here for you guys if you guys want to check it out. Kobra.astrobit.io. Make sure that you guys go check that out. All the algo results are there. Now, I know that there are 2 different strategies, and I get the question all the time, what the fuck is the difference between them? The spot sniper is literally meant for that. It's meant for spot. It's a low risk, low reward strategy. P&L for the year is like 400%, but what's impressive is that the drawdown is like 10% for the whole year. 10%. That's nothing. I think its biggest loss was like 4% or something. It was like ridiculously small. So that's the low risk, low reward one. And obviously most people are going to be more in tune with the high risk, high reward one. Both of these are 1 hour strategies. The Sat Stacker is a high risk, high reward, 9,700% or something for the year. You guys can check all of the new results and everything, or check the link below, come into the Discord, go over to the algo channel category or whatever and look it up for yourself. I post all those updates there. Now, I did release an update on the strategy today, and all this information is in the Discord. However, I did want to mention that I added a catch-all to the strategy. What is a catch-all? A catch-all is to prevent the strategy from being in a losing trade for too long. Now, with my strategy, it doesn't happen very often. However, when I went through the back tests and I went through every trade one by one, 300 some odd trades for the year, I noticed that there was a couple of anomalies that caused this to occur. So I got with the devs and we added a catch-all to the strategy. The catch-all being, hey, guess what? If the algo is short and the price closes above, I'm not going to say which indicators they are because I don't want to dox my fucking algo, but if the candles if 5+ candles close above these 2 lines and the trade is in the opposite direction, close the fucking trade or flip. And there was only 2 instances in a year where that needed to happen. So I added that. The reason why is because if you want as close results to the back test as possible, you have to trade on spot. You can't use a stop. You can't use a take profit. You just got to let it go and do its thing. That's very difficult for people if you're a trader. Not so much if you don't have that time to trade, because you're not looking at it the whole goddamn time and fucking with buttons and changing things. As soon as you start changing things, that's it. You ain't going to get the same results. It's as simple as that. So guys, make sure that you guys check that out. Anyway, please also, if you're here from like Twitter or one of the other YouTubes or whatever, make sure that you check my YouTube and my subscribe and stuff to the YouTube, but also check the Discord out. I'm pretty much going to be staying in the Discord and toning down all the kinds of content that I'm putting on Twitter. It's just too much for me to do at this point. Too many responsibilities, too many members, too many different products and projects and shit that I'm trying to juggle at once. So that's probably where I'm going to be focusing the majority of my time now. I did just release, for those of you that are premium members of the Kobra Trading Den, I did just release for you guys a brand new training video that's exclusive to you guys. It's not listed on YouTube. So you can find that in the education category under training videos. That is there for you today. I'm also going to be releasing a full public tutorial on what the algo is, how it works, as well as the Astrobit platform, what it is, how to sign up for it, how to get started, all the information that you're going to need, summed up in like a nice little 10-minute video for you guys. And yeah, we'll go from there. Next week, I am going to be back on my A game. I am going to be doing 290-second analysis every week. I've been really behind because of client work and, just getting caught up because of the holidays and then snowstorms. My wife had an injured knee for a couple of weeks, so she was down and out. There's been a lot going on here in the last month, so I've gotten pretty far behind on stuff. And this week and last week, well, this week and this weekend, I'm getting all caught up with everything so that I can start fresh next week, focus on content, focus on everything else I need to do. But I really wanted to get that update pushed to the algo. That was like my highest priority because I don't want to see people that are using it without a stop loss, which is what I recommend to do to get the results of the back test. You have to do that because it's always meant for spot technically. So I didn't want anybody that did take that recommendation to end up getting wrecked and losing money. Okay. Like I'm trying to look out for you guys. It's an automated strategy. It's going to do what it does. The only thing I can do is try and prevent it from having an immense amount of drop, like 14% fucking in the negative and it's holding for whatever reason. And then you got to wait like 4 days for it to come back to the entry only to still take a 2% loss and then flip. And it's just, no, absolutely not. I'm not down with that. So that's why I wanted to get that change out as quickly as possible for you guys. I really appreciate you guys being patient with me. I appreciate you guys liking and subbing to my channel and joining the free Discord. I appreciate everybody that follows me on Twitter. And I will get back to you guys on Monday. I hope that you guys have a really blessed and safe weekend. Do your thing. Take it easy. If you live in the United States, happy Martin Luther King Day. And I will see you guys all on Monday. Enjoy the rest of the weekend. Be safe again. And I will see you guys later. Take it easy, guys.